Every economic collapse looks terrifying from the outside. Yet history proves something remarkable. Every downturn, every crash, every so-called end of the financial world has also created a new wave of millionaires. Not by luck, not by gambling, but by understanding a simple truth of wealth. When the world panics, opportunities quietly appear. When most people freeze in fear, a small percentage of people make decisions that change their financial destiny. This is not theory. It is the story of every major collapse, from the Great Depression to the 2008 housing crisis, and even the COVID-19 financial shock. Canada, like the rest of the world, has seen fortunes destroyed and fortunes born in the same moment. The deciding factor has always been mindset, preparation, and the ability to see value where others only see danger. In 1929, when the market crashed 89%, millions of investors lost everything. But Joseph Kennedy, a man who understood crowd psychology, converted to cash before the panic, bought gold as a safety hedge, and positioned himself for volatility. When the dust settled, he emerged not only safe but significantly richer. He did not control the market. He simply recognized the signals that emotional investors ignored. During the same crisis, individuals who held cash or bought discounted assets quietly multiplied their wealth while the loud majority insisted the world was ending. The same pattern repeated in 1987. The crash happened in a single day, with the Dow falling 22.6%. Fear was everywhere. News headlines predicted long-term disaster. Yet Paul Tudor Jones made one of the greatest trades in history during that meltdown, again, not by guessing but by preparing. He studied cycles, understood overvaluation, and positioned before the fall. When the market collapsed, he made $100 million in one day. The lesson is not that you need to be a Wall Street genius. The lesson is that financial storms reward those who stay calm, informed, and disciplined. Fast forward to the year 2000. The dot-com bubble burst, wiping out billions. Tech companies vanished. Retirement accounts collapsed. But once the overpriced, hype-driven companies fell away, investors who recognized the value of real innovation bought into companies like Amazon, Apple, and Google at prices that seem impossible today. Their investments, made at the depth of fear, turned into life-changing wealth in the years that followed. The collapse cleaned the market of noise and left behind the seeds of the next technological revolution. Then came 2008. The housing market imploded. Banks failed. People around the world were convinced this was the worst financial disaster of their lifetime, and yet some of the greatest fortunes of the 21st century were built in those exact years. Warren Buffett made bold investments when the entire world was selling. Canadian investors who bought discounted real estate, stocks, and long-term assets during the crisis saw extraordinary returns throughout the decade. It's easy to look back now and say, of course it recovered, but in real time, nobody felt safe. The people who acted were not fearless, they were informed. This brings us to the real message. Wealth is not built during good times. Wealth is built in bad times and realized in good times. Anyone can invest when markets are booming. Anyone can feel comfortable when everything is rising. But comfort has never created generational wealth. Every Canadian who built a strong financial future did so by making smart, disciplined decisions when the world around them was uncertain. Collapse is not the opposite of opportunity. Collapse is the birthplace of opportunity. In the COVID-19 crash, markets fell more than 30% in weeks. Jobs were lost, businesses shut down, fear was global. But once again, history repeated itself. People who invested in technology, healthcare, digital infrastructure, or simply held long-term positions saw some of the fastest market recoveries ever recorded. Companies like Shopify, based in Canada, surged because they were positioned for the digital shift. Investors who believed in long-term fundamentals instead of short-term fear were rewarded. So the question becomes, why do so few people benefit from collapses when the blueprint is available to everyone? The answer is mindset. Most people freeze when the market turns red. They watch the news, feel the fear, and assume the worst. They forget that markets have always recovered. They forget that volatility is temporary, but decisions made during volatility last a lifetime. The individuals who become millionaires during collapses are not gamblers. They are students of history. They understand risk management, diversification, cash positioning, and the importance of patience. They don't rush. They don't panic. They prepare. A collapse teaches powerful lessons to anyone willing to listen. It teaches the difference between price and value. Price is what the market says today. Value is what the asset is truly worth. During crises, the gap between price and value becomes enormous, and that gap is where wealth is created. A collapse also teaches the importance of cash. Not because cash earns much, but because cash gives you the ability to act when everyone else is paralyzed. It teaches the importance of resilience, emotional resilience, financial resilience, and strategic resilience. And perhaps the greatest lesson, you do not need to be rich to start benefiting from downturns. Many of history's strongest investors began with small amounts. What they had was knowledge, patience, and the courage to act slowly and strategically when others acted emotionally. Wealth is not an overnight event. It is built one decision at a time, especially during uncertain moments. Canada today faces economic challenges like inflation, rising interest rates, and global instability. But challenges are not roadblocks. They are signals. They remind us to pay attention, to stay disciplined, and to position ourselves wisely. No economy stays down forever. No downturn lasts without recovery. And when recovery comes, those who prepared during the collapse always rise higher than those who waited for safety. Every collapse creates millionaires because collapses reveal true value, eliminate false confidence, and reset the financial system. The question is never whether opportunity exists. The question is whether you recognize it when it arrives. History has already given the proof. Your job is to use it. If you learn from the past, stay calm during volatility, and make disciplined decisions, then the next collapse will not be something you fear. It will be something you are ready for. And in that readiness lies the beginning of financial freedom, long-term growth, and the possibility of becoming one of the people who rise when everyone else falls.